Hey folks, Dan Frio here with your live event. Finally, we're about 15 minutes late, but what's happening is I had some technical issues, so my apologies about this. So hopefully you can join us at this point. If you can't, hopefully you can catch the recording. So what we're going to talk about in today's video are those that are out there trying to find a house, and they're trying to time the market. When's a good time to buy? What's a good interest rate? Then we're also going to talk to those out there that own a house, and they're looking to time that market like they did last September. If you don't remember, last September, the rates kept coming down and down and down, and then the Federal Reserve, everybody was waiting for the Federal Reserve to cut. And then they did, and then rates skyrocketed. So when can you time the markets? What data do we look at? And what resources do you have that might be able to help you out? So that's what we're going to talk about in today's video. So here's what's happening in today's market. We're seeing rates right here. They eased a little bit today. The Dow Jones got absolutely pummeled, down 700 points today. But we had a good day in the markets that we're seeing right through here. So here's what we're going to look at is the MBS market, because this is what I focus in on. And this is actually the mortgage bond that we focus in on. And I'm going to show you some major volatility that we've had. So we're going to go over that in a second. We're also going to go over the economic calendar, why this plays a role in interest rates and everything else. What the Federal Reserve is going to do. They monitor this data right through here. And so they're coming up with a meeting in 20 days. What are they going to do? And then I'm going to go over and analyze some interest rates with you guys and do a whole bunch of information. So in this live event, I need your participation. So if you're out there and you're trying to time that market, let me know, what you're looking for. I'll give you some of the data that I'm thinking, what we're going to see short-term, midterm, and long-term. So let's get over to it. So here's what we're seeing in rates today. But here's what we want to focus in on. What's going to happen, what's happening, and what's causing all these things. So if you're a home, we're first going to talk to those out there that are looking to buy a house. Okay, so you're going to see some major volatility. In the next 90 days, though, a lot of things are supposed to be calming down. So I'm not just throwing out a 90-day figure. Actually, the government came out last night, Secretary of the Treasury, Besant, and he said within 90 days, we should really have a bead on what the heck's going on with the tariffs, thus what's going to go on with everything else. Okay, so that's the big data points that we're seeing right now. It's all about tariffs. Well, let's look back at what we do. So we're going to look short term for those out there that are looking to buy. So what happened actually last week and the week before and things like that when we first got tariffs implemented, then when they got paused, and then the other factors came in. So let's just go back and look at let's say what the last month did. This is what the chart looks over the last month. So it might not look that detrimental to you, but these are pretty major swings that you're seeing in the market. So what you first have to understand is what chart you're looking at right now. Okay. And this is a chart of what the price of a mortgage-backed security is doing. And the reason why we're looking at this thing is because we're looking at trying to look at long-term, short-term, and midterm charting to figure out what the patterns are looking like. Then we're going to look at some economic calendar events that are coming out, what the Federal Reserve is going to look at, and then an outlook on tariffs. So we have a lot of data coming in that I need your participation in. If you're out there and you're in this field or you're in some other field, let me know what you do. You might be able to, give us some key points in here, especially when you're in logistics and you're in construction. We'd love your feedback in this. So let's look at the short term. What you're going to see right now, it's going to be choppy as hell. So if you're out there and you're finding that house and you can work with somebody that can lock you in kind of instantaneously as soon as you get a contract in, that might be what you want to do. But you want to make sure you have an outlet just in case something like this happens. And we're just going to go back to the last 5 days because this is not normal, folks. A normal chart is basically it's moving a little bit up and down. This chart, if you look at the numbers, if you go down through here at the bottom, okay, the number is 97.8. Where are we at now? 99.2. That's a 130-point move in this. That is massive when it comes to the bond market. This is unprecedented. Okay, so when this bond goes up, rates are coming down. Okay, so that's why you got rates coming down to these levels. It might be like, okay, that's really not that much, but rates about a week ago were about 7.25. You go back a year ago, and they were about 8.25. About January of 2024, the latter part of 2023. So if you're looking to buy a house, the short term is going to be really volatile for the last 60, 90 days. So you now have to, I don't like going into the weekends not locking in people, because if a tariff situation hits, good news or bad news hits, you can have interest rates jump. And we've seen it in the last couple of weeks, over 0.25% in 24 hours. So if you can afford that big of a jump, you might want to chance it. But we lock our clients in normally right when they come on board. Here's the problem with a lot of that is, if you lock in at a bank, the bank has this opportunity of this. Now, here's, we're going to start talking about floating and locking. Okay. And I'll try to chapter these down below. A lot of confusion comes on, it's like, well, when do we lock and how do we lock? And can we buy it down if the rates go down? Can I do something? If rates go up, I'm protected, right? So let me kind of analyze it this way. And if you're new to the channel, this will make sense. If you're old to the channel, you're going to get what I say. My analogy that I most likely put in this is, it's like buying stock. Okay. So when you're floating, it means you're watching it. So it's like you're watching a stock. So have you bought an Nvidia lately or anything like that? Or if not, you're like, okay, it's dropping, it's down 10% today, maybe I'll buy. So you're watching the markets. Just kind of like the same thing when it comes to interest rates. We watch the market and it moves dramatically every day. Okay. So we try to help, pinpoint a time when, we can lock in. But how you lock in is when you finally decide, okay, I'm going to buy the Nvidia stock. So now you own it. So now here's the question. A lot of people ask is, once I lock in, what if rates drop? Well, let me ask you the same thing. What if you buy that Nvidia stock and it drops the next day? Can you go back to your broker and say, I really don't like this price it dropped. Can I go back and give you this and then I'll buy it lower? They're going to laugh. Okay. In most cases, that's what you're going to find from your banker. That's why I work at a federal bank, and that gives me a license throughout the whole country, but we're set up with 33 other lenders as well as ourselves. And that's why our slogan's one application, one credit pool. We're going to shop your loan over 30 different lenders. It's just because of that. So if you're looking at the screen right here, this is a massive move in interest rates. This is probably 3/8, maybe 0.5% in interest rates from April 11th to today. Okay, that's a massive move in rates. So for example, if you lock down here, you could probably easily get 0.25% better in rate right through here. Okay, so what I'd suggest you do is reach out to your lender, see what they can do for you. If they can't help you, I'll give you all my information at the end of this video, because we revised our website, and I'm going to give you the tools, all the tools you need to basically reach out to us and help us help you, I guess is the best way to put it. Okay, so let's getting back. So that's now what means locking and floating. So now let's go back through this. Let's assume that you're looking to buy that house. I would anticipate qualifying at a 7% rate right now in the short term if you're looking to buy. Okay, that's what I would be doing. Okay, so let's look for those out there that are trying to refinance, because this is going to come into play also with those home buyers that might just procrastinate a little bit and say, okay, maybe I'll wait for rates to come down. Might not be a good idea, but only time's going to tell. What's happening with a lot of people, if we go back to this chart, well, let's go to another chart that we might have. I pulled up interest rates over here. So here's interest rates just from September of last year to today. And this is when everybody was waiting right down through here. They're waiting for the Federal Reserve to cut rates. And they did. The Federal Reserve cut rates 50 basis points, the biggest move or the biggest cut they've done in, I don't know how long. And what happened with mortgage rates? They went from 6.1. Everybody was anticipating the Fed's cutting, and so they're now going to plummet even more. What did they do? Well, pretty much really fast. They went all the way up to 7.24. Okay. Within, what is that? 3 months, 90 days, 60 days, 1 full percent. So this is what's happening. So then what people said was, oh man, I missed that. So then they start riding the wave. We locked a lot of people down through these areas right through here. And we all anticipated, well, they're going to continue to come down. And then the tariff situation hit. And we know that from the date, basically. You can see it right through here. And then the volatility hit. So now it's all over the map. So here's what I'm suggesting to do. And this is what we actually built out for you. You have to focus in on the economic news coming in. So this is where we can come into play, or just even watch my channel every day. You can watch probably the first 5, 6, 7 minutes and you get it. At the end of the day, watch 5, 6 minutes and you get it. I'm not biased. I want to try to not be biased one way or another. I tell you what's going on in the markets and the whys behind it. Okay, so this is what's going on. So if you're looking to refinance, here's a tool we just created, and it's actually being built even more in the background. Go to our website, and we'll get back to all these other interest rates and what we're going to monitor and lock in and so forth. But here's the system we just put in place, and now we just automated this system. If you want us to monitor the rate, if you're a homeowner right now and you're like, okay, Dan, I missed it last time, and I got greedy again and I missed it again. What can I do? Well, go to our website, therateupdate.com. Okay, we're revamping this thing daily. There's programs, calculators, all kind of things through here. Here's what we just put in. We have the RateWatch tool. Okay, so this is for homeowners right now. And you can maybe even create one of these. It's not really needed if you're looking to buy a house. I'm not suggesting wait to buy a house until rates get to where they need to be. You might be waiting forever. Okay, so honey buns, you're back and you're scared. Good job. Let's get back to these. So here's what we just put in, and I'll go over that in a second. Here's a lot of videos. If there's videos up here you can't find, like first-time homebuyer guides, check it out. If you're a disabled veteran, we have a lot of disabled veteran calling us, and they're looking to refinance their VA loans. They can almost do it with no costs at all, and we work with you. Okay, if you're just looking at a VA refinance and the whole, understanding credit scores and everything else. But what we have in here and we're focusing in on right now is those homeowners that close their rates and they have interest rates at high 7s, low 8s. What can you do? Well, here's a tool you can use. Go to therateupdate.com. Click this button right here. It's going to give you a couple different things. It's going to give you a video. It's going to show you exactly what we do, how to do it. We don't sell your data. I promise you on that. It's completely secured. You're just going to put in your information, what kind of loan you have, what rate you have, and what interest rate are you looking for us to monitor to reach out to you when the rate hits that, so you don't miss it again. Okay, so we can go back again to where interest rates were. If you missed it in September, and then rates spiked, they went up to, look how quick this went. It went from, what date is that? That is 9/12, right around 9/12, 9/18 to 11/5. So 45 days. Within 45 days, rates went up almost 100, 1%, which is 100 basis points. Then again, people waited and did here. Okay, so now this is what I would do if I'm a homeowner. Put in your information right through here, and I'll monitor it for you. When rates hit it, we'll take care of you. If you're a home buyer, short term, where rates are going. I think in the short term, they're going to be all over the map. Midterm, after 90 days, we're going to get a huge reprieve. Hopefully, here's what happens. And let's get over to just some other things that we could look at. Everything is talking about tariffs, and then AI and tariffs. What happens if tariffs don't come out to be so bad? Okay, so let's just take a look. I want to help you guys understand midterm, long term. Okay, so let's go over and just look at some technicals we want to look at. The Federal Reserve, they're still a big piece of this. So they're going to monitor things like inflation, unemployment rate, GDP, because they control what's called the federal funds rate. Okay, the federal funds rate's right through here. 4.25 to 4.5 is where it is now. If you look at this is going to tell us what the probability is of what the Federal Reserve is going to do in the future. So we're here, 4.25, 4.5, right through here. And here's the dates of all the next meetings through the next year and a half. Okay, you can see through here in May, expected 83% chance they're not going to do anything. We're going to stay at the 4.25 to 4.5. But if you go down to June, they're expected to cut. July, another over 50% cut. Another one. So now we're starting to see multiples in rate cuts. Is it going to happen? I don't know. It's all going to be dependent on right through here. But other key factors that play a role in this that we'll go back to is inflation. We got inflation last week. The numbers that came in, they actually came in fantastic. Fantastic. But why they didn't really move the markets? Well, the tariff scares, okay? So inflation, believe it or not, it came down, and it came down more than expected, the CPI and the PPI. All right, you go over to the unemployment rate. Unemployment, last reading on job numbers, we had 250,000 people got new jobs. It's well over 150,000. Usually I look at 150,000 and more. That's a pretty good economy. And then you go to the GDP. GDP is all over the map right now because of tariffs. Nobody knows what's going to go on because of tariffs. So let's just say this stays positive. We don't have a crash in the unemployment rate. We don't have the world ending because of tariffs. After 90 days, maybe a lot of people do settle. Okay, so let's go over to one thing, and this might be. I just want to explain something to you. I always had a pet peeve about this. And this is why I say rates are higher than they should be. And there's a bigger spread between government bonds and mortgage rates. So here's what I'm getting at. We have way too much debt. Okay, if we can slow down this thing or even reverse it and get a balanced budget, not go into so much debt, could it be helpful? Well, we see Doge might be helping. And if I haven't done this yet, but let me know if you've gone into the Doge website and if there's things in here. But you look at this and it says Indonesia just was getting 120,000. We just saved 1.5 billion not sending money to Indonesians environmental policy specialists or something like that. I don't know much about this. If you do, leave a comment. But the national deficit is ridiculous. So if this can be cured, the tariffs don't come back as bad. But even if we have tariffs, could it help our national debt? Well, if you look up through here, it's saying short term, the Committee of Responsible Federal Budgets project that the newly announced reciprocal tariffs could generate between 100 billion and 200 billion. Well, long term could bring in over 2.4 trillion and over a 10-year period. So this is another company, a $4 trillion deficit. So could we bring down our national debt to, a balanced budget or even half of this? Be fantastic for our country, be fantastic for debt, be fantastic for interest rates. Okay, so let's rewind it a little bit. Midterm, going to be dependent on the tariffs. And I hate to say it that way. The Federal Reserve is going to sit on their hands because the jobs report came in okay. The inflation rates are coming in okay. So we're going to see the Federal Reserve just sitting on the sidelines. They're not going to do anything until something either cracks one way or another. Either we see tariffs working, and then it distracts all the fear out of the economy. You're going to see the stock market rally like all get out. It's probably its worst situation now because of all the reciprocal tariffs, especially China. So now China wants to talk. Japan wants to talk. India wants to talk. They're making all these settlements. Is it going to help this? Okay, I think in the long run, this is going to be fantastic, a great buying opportunity. Not a financial planner. I don't take my words as trading advice. And, I just give this for educational and entertainment purposes. But my thoughts on this is I'm thinking midterm after 90 days to about 6 months, we're going to have that period where we're going to start to really settle down. And then that's going to be our pivotal point in the next, 120 days, 90 to 120 days. It's going to be crazy. Use our RateWatch tool. Love to be able to help you. Use our experience, all of our technology that we can help you. If you're out there looking to buy a house, and we can do it on a whim. If you're out there, I answer the phone at 9, 10 o'clock at night, hoping to lock people in. So if that's what you're looking for, a partner to help you through all these things, we would love to help. The economic calendar for this week, where we got retail sales today that came in really good. We do have initial jobless claims coming in tomorrow. Friday's Good Friday, so it'll be close. I don't even think if the jobless claims come in, I think they're going to come in fairly on point. The rest of the numbers in employment came in pretty good. This isn't going to shock in all the markets at all this week. So I'm thinking this week should be really nothing. We really had no data today, and look what happened to the market. The market's up 18 ticks, and we got a little bit of a reprieve here as well. So I'm floating everybody right now. I'm going to go into tomorrow. I might not go into the holiday weekend though, floating people, because I just don't like, the Russia situation. What's happening with Russia and Ukraine? I haven't heard much about that lately. So there's a lot of other things, distractions going on right now that we haven't seen in the background. So we're going to see how a lot of this plays out. But the bottom line is right now, if you're looking to buy, try to work around the 7% interest rate. If somebody can get you much better, 6.875 or whatever, reach out to us. We'd love to help you there as well. That's what I would work on if I'm looking to get pre-qualified or pre-approved. If you're looking to refinance, the only thing I would highly suggest is use our RateWatch tool. So what you're going to do is you're going to go over to the rate update. And I'll show you this right here. I'm going to show you that here in 1 second. But here's our RateWatch tool. And again, you're going to go to the rateupdate.com. Here's our website. You're going to find a whole bunch of information up through here. You can put in your application, schedule a consultation call. All the calculators we use on this video and a lot of the other videos I added to this, and it'll say right down through here, it'll say used in videos. So what you could go down through here, and this is mortgage payment calculators. Should I refinance? This is a pretty cool calculator. Let's just jump into this real quick. And I'm going to show you one of these calculators on how it works. If you're also looking to buy a house, let me show you another calculator we have that goes a little bit more in depth than most calculators. And I'll show you how to use it to get the most precise numbers that you're going to get. So if you guys have questions, please bring them out to me. Love to answer those, but this must be somebody that just put in the last refinance question, but let's tweak it. Let's say if my original loan amount, I bought it in January of 2024 and I spent $355,000. Okay, well, that was my mortgage amount. I closed at a 7.875 rate, 30-year fixed, and it was in January of 2024. So we're going to do that. All right, it's going to give you what your principal and interest payment would be for. So what you're going to do is then move this number down, and you're going to say, okay, my current balance is, just look at your mortgage statement. It's going to say it's 353. I'm just going to make up the number. Okay, you're not looking for any cash out. The closing costs, we're going to say you're in the middle countries, because if you're middle of the country, if you're in Florida, the costs get a little expensive. If you're in New York, we have a fantastic program for you that can cut your closing costs in your refinance by thousands. And that we had one, I think it saved like 20 grand in closing costs. So you got to check that out. I'm working on a video to do that. Let's say you're in the middle of the country. It might cost you 3 grand to refinance. Okay. So it's going to calculate this here through here. Let's go to where the mortgage rates are today, 6.86. So let's get back to our mortgage calculator. Oh, where did it go? 6.86, 6.86 on a 30-year term. Click, and boom. So what's this going to do? Well, it's going to save me $338 a month, $88,000 over the life of the loan, and it'll pay me back, or I'll recoup all my closing costs within 9 payments. So after 9 payments, you're saving money every month. So what most people look at in the long term, they're like, if I can recover my costs within a year, I'm good to go. In this market, that's probably a good trigger point, because you don't know what tomorrow's going to bring. Are they going to spike again? But the one thing is, closing costs are a fraction of what they are when you bought the house. So you might be surprised, especially like I said, if you're in New York, reach out to us, because our closing costs, we have a certificate that we can apply for you. That can really dramatically cut those closing costs down, because a lot of people in New York, the first thing they do is when they call in, they're like, I know my closing costs can be like 30, 40 grand. I'm like, no, how about 9? And they're like, oh, okay, let's move forward. So depending on your closing costs, you might be able to do this more often. Like if you're in Illinois, you could probably get these costs down to maybe $1,200. If you can get an appraisal waiver. Now let's look at that break even. You're going to save $250 a month. That's enough for, at least your cable bill nowadays. You go down through here, you're going to have a break even point of less than 5 payments. So not a bad deal there as well. If you're a homeowner or looking to buy your house, let's go. Let's say you're looking to buy a house. Let's check the calculator out that'll help you there. Used in videos. Okay. We're going to mortgage payment calculator and amortization schedule. So what you're going to do is you're going to choose the program that you're looking for. So let's just go with a conventional loan. Let's take this one right through here. I'm going to move this over here just to help me out. So let's get over here. The rate is 6.86. So we're going to go in with a rate at 6.86. 6.86. And these people on this chart, because if you're on Mortgage News Daily, this is where we get our rates every day. What they do is these rates, I explain it to you every once in a while, but to get these rates, these aren't my rates. These aren't any individual bank's rates. What they are is Mortgage News Daily. They do a fantastic job. I've been a subscriber of theirs for probably almost my whole duration of being a loan officer, I want to think. But they give us this data, and they survey lenders all over the country, and they ask them 5 questions. The 5 questions are this is going to be your first home. It's a single family home, and you're going to live there. It's going to be your primary home. You might be like, okay, that's me. Well, these people also have, let's go learn more about the survey, because I always tell you, don't judge a book by its cover. You go in here and you open this up, and what's it going to tell us? Well, right through here, it's telling us a top tier scenario used as the baseline, 75% loan to value with a 780 credit score. So this means these people put down 25%. Well, let's get over to this. And I'm just copying off of that because I want to get the precise rate. 25%. Okay, you're going to close, let's say in May of 2025. And here you go. So down through here, this is what's going to happen. So here's where a lot of calculators fail. Okay. And I'm not even going to say this one's going to be absolutely perfect, because there's also, you're going to pay PMI. And in here, I don't know if it's really included in here. And that's my only concern with this calculator. But let's go through here. And one of the first things I want people to do, if you're out there looking to buy a home, okay, I know you're really adamant about that interest rate. One thing I need you to do is also call your insurance agent. Find out how much your insurance is going to cost on that property, because that might be a big surprise. I used to use about $150 a month as a calculation for people's homeowners insurance. I don't even think that's in the realm anymore. So please be careful and make sure you call your insurance agent and just get a quote. Okay, so we're going to put that quote in here. We're going to say this is $2,200. All right. And I always say, be on the high side. Wouldn't you rather run a calculation and see a number and say, okay, that's not so bad, versus, or you can afford it. And then we come back and say, well, the rate's now at 6.5, or your taxes aren't that much, so your payment's going to go down. Probably be much happier if you had that situation than, me calling you and saying, well, I know you thought the payment was going to be $2,000, but it's going to be $3,000. You'll probably flip out. So use numbers that might be just a little bit elevated, just to give you a little bit of a cushion. Let's go into a question real quick that we might be able to have. So I want this guy, folks, I need participation. So pop up those questions. I'll bring them up as they come in. Please be kind of what your questions are, though. Dan, if I choose a no-cost refinance, on average, how much more interest base they put on the interest rate? There is none. That's a great question. Here's what happens a lot of times, and it depends if you're truly getting, a no-cost deal or things like that. Here's what happens, folks. Let's say the rate today, we'll go to this, and that's a great question. We'll get back to this calculator in a second, but let's say the rate today is, we'll go back to this, 6.86. Okay, that's what the bank's offering. All right, I'm going to move your question here for a second. This is, we're making money. As a bank, we're making money on this. Okay. How much? There's no set thing. It's like, how much does your car dealership make on that car? Every place is different. You have different profit margins. You have different rates. You might have preferred rates. Like we're a wholesale broker. We do large volumes. So we get rates that you can't get if you go directly to a lot of these places. A lot of places you go to, we might be using their wholesale channel. That's why we can even go to that exact same company and offer you the exact same thing, but at cheaper costs. So we're making money at this. But what happens normally is, to get a free loan to a point, is you can increase the rate. And at one point, I'll show you guys, we call it a rate stack. Okay, so basically it means this. And if you ever called your lender and said, okay, can I buy down the rate? Well, it works kind of the other way, or a flip-flop the other way. Okay, so let me explain that to you. You want to buy down the rate. So it might be like the rate right now is 6.86. Well, if you want 6.5, it might cost you $5,000. Okay. Well, it kind of works the same way the other way. Okay. So let's say, for example, I'm like, well, I can give you a rate at 7.125 and I'll give you a $5,000 credit back. Well, that's normally what happens. A lot of companies, and we do it a lot of times as well, is we don't do that. We'll give you like a friends and if we do multiple loans for you, we'll eat it. We'll be like, okay, we'll reduce our profit margins considerably to take out, maybe the loan officer's commission or something like that, and take that or use that commissions to pay your costs. So that's where you want to, be cognizant of who you're working with, how they're doing things, and so forth. But that's a great question. But there is no set, it is X to get X. It's the same thing. If you ask your lender, well, how much is it to buy down the rate? Every lender is going to be different. And you're like, why? It's the mathematics behind it all. It's all our rates and profit margins are built into, algorithms and everything else in the background, and we just tweak it. So I'm not an engineer. I don't know the answer to that one. So sorry. But thanks for your question, Fahid. Let's go back to this. So the one area we want to be cautious of is your homeowner's insurance. Okay. The other area down through here, what we were talking about, folks, is how to figure out what your house payment's going to be. Because one of the biggest questions is, or that I get is, Dan, what would that house payment look like? These are the simplest things I can give you. These are the tools right in your hands, and you can find them right on my website. So then you're going to go to taxes because we already handled the homeowner's insurance. Now, what are the real estate taxes? Okay. A lot of states have a percentage. So what you might be able to do is just Google, say, how much is the real estate tax rate in Chicago, Illinois? Or what's the real estate taxes and so forth. Then you can actually factor that number in here, or you can look it up on the NMLS or something like that if the house is for sale. Be careful when you do that, though, because a lot of times that data might be inaccurate. They might have a discount. Like if you're a veteran or you're a disabled veteran, you might be getting discounts on your taxes. You're a senior, you're getting a senior, freeze even on your real estate taxes. So be careful with those real estate taxes. And again, this is an area where you can really mess up because if you undervalue this, it could really skew your payments. And then HOA. This is the Homeowners Association. You might have it, you might not. Most of the time, if you don't know what we're talking about, then put 0 in there. The only concern, like I said, that I have over here, it is telling us what the principal and interest is, your real estate taxes, and your insurances. It does not factor in what they call PMI, private mortgage insurance. This one wouldn't have it. Let me see if they tweak this. Let's change this to 10%. It wouldn't have it on this loan, but if we go to 10%, let's see if they've updated this. And I apologize. I should have done this behind the scenes. Oh, so there is a PMI calculation right through here. So that is fantastic. What I'm going to advise you to do is move this up to a point. We're going to work at a 0.55 right now. So why this is a toolbar like that, we're going to work and move that over to 0.55 or 0.59, going to be good enough. And again, we want this to err on the side of being high. Okay. So now you scroll up and you got everything. You have your loan amount, what type of loan it is, how much you're putting down, what that rate's going to be, when you potentially are going to close. You're going to finance the closing costs. Okay. You're going to bring the money down for closing, but you're going to finance closing costs. You're going to have homeowners insurance, $2,200, taxes, and we put that PMI factor in. You could Google, but just use 0.55. You can use 0.7. This number, it's not going to change dramatically, but again, you can play with this a little bit. This is going to be dependent on your credit score and how much money you put down. Those are two of the biggest factors, as well as the zip code. So that's a great calculator to use, and it's going to tell you right through here. Here's the entire breakdown of that payment. Now, if you look at how much interest you pay in that first payment, you're going to throw up. Okay. But as time goes on, let's see if we have an amortization schedule that we can see here. Yeah, you can see an amortization schedule. You can see all kinds of things. This is going to tell you from year one, this is how much interest you paid, interest going to principal each month, blah, 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 blah. And it just goes all the way down through. And there's all kind of information down here. You can sign up for my newsletter and a whole bunch of other things down through there. So that's that piece of that equation. So that's if you're looking for that house payment. And again, hopefully you learned a little bit today on how to, what the thoughts are, short-term rates. They're going to be all over the map. It's just like the stock market. Nobody knows, folks. And if you think somebody's out there saying, okay, I know, no, I actually reached out to a couple of YouTubers I did live events with 3 years ago. They were talking about the housing crash. And I just said, hey, would you guys want to entertain, just recapping some things? Haven't heard back from any of them yet, but if you guys know them, let me know if anybody's interested in talking about some things. But that's what we're looking at right now. Short-term, volatile as all get out. If you're looking 90 to 120 days, maybe a little bit further than that, you're probably going to be rewarded with a little bit lower rates. But don't be shocked if we just have one piece. If President Trump sneezes instead of coughs, when he was supposed to cough, he sneezed. You can see the market turn immediately, and that's why we're offering you this tool right through here. Before we do anything, before I lose you guys, here's what I need you to do. And I've been asking every client that we have if they've done this. So did you sign up for the do not call list? Okay, what the do not call list does or did is it was supposed to exempt you from getting phone calls from solicitors. It didn't work for me very well, but this did. Okay, the opt-out pre-screener. Here's what happens. You might hear what they call trigger leads. What are trigger leads? Well, when a company pulls your credit because you're looking for a mortgage or a car loan, the credit agencies are going to sell your data. So if you want to stop that, I didn't create this. The credit agencies did. They tried to get through legislation and they killed it. So go to optoutprescreener.com. You can sign up for that right down through here at the bottom. You're going to click it and just choose the option you want. And it's supposed to stop them from selling your data, because what will happen is if you apply for a mortgage, even on my site, we pull your credit, you're probably going to get 30, 40, 50 different phone calls from solicitors. They don't know who you are or what you're really doing, but they just know you're looking for a mortgage and they're going to promise you the world. So that's that part of that. So let's get over to anything else we want to cover in today's event. Well, it doesn't look like it. So again, here's my focus: short term, midterm, and long term. On the short term, if you get it and you get it, come in. If it makes sense to you, lock. Don't wait for the next day. And if you lock in and you messed up and you need some help, say you locked in, down here, and this is where rates are, again, this is inverted. So when this chart goes up, rates come down. If you locked in down through here, April 10th, 11th, or 12th, give me a phone call, because you could probably save a bunch of money at this time. If you're with us, you're in great hands. So that's what we're looking for. Short term, if you get a contract in, take it, sign it, lock in. If you're locked in, you want us to compare your quotes, reach out to us. You can email me, or there's going to be a system on our website here shortly where you can upload that data into it. Midterm, it's going to be dependent. If you're wanting to hold off that refinance, check what your break-even point is, what your costs are going to be. And if it makes sense and you can break even in 6 months or less, I would do it. Maybe even if you can break even in 12 months or less, you might want to look into do that, because we don't know what tomorrow's going to bring. So don't let these movements in the markets not work in your favor. So use the volatility in your favor and let us help you lock at the right times. Long term, don't really know what's going to go on. My expectations are by the end of this year, a lot of this stuff should be settled. There's probably going to be a lot of lawsuits in Washington, D.C., but I think as the economy, we're going to be okay. Okay, so if you're in the stock market, watch my stock talk videos I do, trying to just teach those out there. What is basically, economics, just the basics behind it, supply, demand. If you're looking to invest, what are really safe investments, how you can trickle in maybe $10, $20 a paycheck to get started. But one of the biggest things is we need to start talking about budgets. So that's a project I'm working on. Probably doesn't sound like a sexy thing to talk about, but if you get on a budget and you can stay on that, it's short-term, long-term, and midterm, it works out very well. I can promise you that. So that's our report for today. I'll leave it at that. If you got any questions, please leave them. I'll try to come back to the live events and answer those questions. But I do this every Wednesday, and I apologize I was late today. My live systems, they just keep giving me headaches. And but I'll be working on that and getting that fixed, just like we're tweaking our website, hopefully making that a little more user-friendly as well. So take care, folks. God bless. Thanks for watching. Can't wait to see you back here next week. Same time, same place. See you then. Bye-bye.